Michel Accad, the CEO of Gulf Bank since 2009. Gulf Bank is a very interesting institution here in the heart of Kuwait City, a bank that has gone through several crises of its own, but which has been able to survive because of its strong retail franchise. In the last 3 years, and in the time that Mr. Accad was made CEO, the bank had gone through a crisis generated by its investments in derivatives and then through bad loans. And Michel Accad was brought into the bank to rehabilitate it, to strengthen the balance sheet and take it forward. I'm speaking to him at a time when the whole of the Arab world is undergoing a huge transition. And so this interview is as much a statement on Gulf Bank's future in the wake of the Arab Spring, which now is moved into the Arab Summer, as it is about the bank's business, organic business itself. Thank you very much for speaking to us, Michel Accad. The development of capital markets in the Middle East, it's not as fast as it should be, and the yields on the bonds that you lend to would be very unattractive if it was for players from outside of the region. On top of which, the Arab Spring, which is now Arab Summer, puts a lot of stress on asset valuation, I'm sure.
Yeah.
So how is that playing out for you, and what do you think is the risk that you need to be cautious about going forward?
Kuwait has been, I won't say insulated. Nobody's insulated, against the Arab Spring. First, I'd say that the Arab Spring in general is a beautiful thing that has happened, to the area. I think it's about time the Arab world wakes up to the reality, and we've had people who've been in power for years and years, and even though they call themselves socialist government, it's their sons who took over, who are groomed to take over. That is no more acceptable in today's world. So that is, if you want, the great news is that people are waking up the same way as when the Berlin Wall fell. I think it's going to be as significant. But of course, as with any upheaval, I think that the next 5 to 10 years are going to be very difficult, and things might get worse, or probably will, before they get better. Now, some countries are, if you want, better protected than others. I'll give you examples. For example, you've got, let's say, Qatar and the Emirates have relatively such a small population that is fairly well treated by the leadership, that they probably will be, broadly speaking, unaffected or affected much less than others. Kuwait has also a little bit of this, but in addition has a form of democracy with the parliament, and I think that even though it does create inefficiencies in terms of decision making, example, the developmental plan is taking a lot more time because of this. However, this is a safety valve because the people's view are also expressed through this parliament, and disputes take place in the parliament rather than on the street. And frankly, the only demonstrations that we've seen so far in Kuwait are actually people, the Bedouin without a clear nationality that roam around the area, are demonstrating to get the Kuwaiti nationality, because there are so many benefits of being a Kuwaiti citizen. Therefore, in general, Kuwait has not been that affected by the Arab Spring, though of course up to a certain extent everybody is impacted.
And for banks, for the banking industry itself, how does that work out in terms of the issues that you need to be careful that will not impact your business in the long term? I can already think that, as I said, asset valuation is a challenge. And profitability will probably continue to be a challenge.
Absolutely. Look, on asset valuation, the best protection is not to have 50% of your portfolio dependent on those asset valuation. Of course, it's not because it's a direct loan for that, but it may be loans that are guaranteed, or the security of this loan is just this asset, and therefore it impacts you. What I would like is that, well, over time, maybe less than 25% of my portfolio would be depending on such asset valuation. So that would make me much more comfortable. And in fact, we've really, the progress, if you look at the quality of the balance sheet today versus what it was 3 years ago, it's just incredible. You look at it, and it's another bank. It's got nothing to do with it. So so this is how we protect ourselves in terms of loan quality. Of course, on the profitability side, and where does the profitability comes from? It will still have to come, or a lot of it will still have to come from spreads, net interest spreads. And even though sometimes they may not be that attractive, there are other products and services that are, wrapped around loans. Somebody who takes a loan from you also, opens these letters of credits and, guarantees and so on with you. So the profitability comes, as far as we're concerned, from the net interest spread, and another part comes from, those customer-related fees and commission. Very little today, if not nothing actually, comes from the proprietary trading aspect, from investment banking activity. So we don't have this. Does it affect profitability? Yes. So today, actually, when we say we are restoring our profitability to pre-crisis level, is that, well, you need to correct for the pre-crisis level for the profits we thought we made on derivatives, because actually, you can make a profit of $5 to $10 million dollar a year, but then lose $1 billion when it happens. So no, this is not the business we want to be. We will not be, volatility is going to disappear, has disappeared from our earning. In fact, since the middle of last year, every quarter has been better than the previous quarter. And my expectation is that this is going to continue until early next year, until we reach our cruising speed.